for the month, we're seeing declines. More recently, in the last few days, we're seeing a bit of a rally. Which one do you believe is going to carry momentum into September?
I think we're going to see some more weakness as we move into September. I mean, October is generally, August is generally a tough month for the stock market, but September is the worst month for the stock market. And the thing that concerns me the most is this level of interest rates. I mean, I think Romain Bostic, that Chairman Bostic, President Bostic, I should say, I'm sorry, is correct that the Fed may not be raising interest rates anymore. They may be done. The question for me, though, is that enough to really push the stock market a lot higher? And I question that, because I think a lot of people are equating the end of rate hikes with easing, or even the end of rate hikes with the kind of monetary stimulus that we had in 2020 and 2021. I just don't think that's the case.
All right, fair enough point. One of the things that's really been pushing the market higher is also consumer discretionary spending. That sector up over 30% year to date. Important to note that two stocks in there are Tesla and Amazon. So it's not necessarily what you may think when it comes to consumer discretionary spending. With the return of student loans, are you worried about that impact on that sector and the broader market?
Yes, I mean, because, of course, we had this whole thing with the student loans, as you just mentioned, coming home to roost, and are coming back, from the hiatus they've been on for a while. But the biggest thing, of course, we have this situation where credit card debt is at all-time highs. We're starting to see a rise in delinquencies in credit cards and credit card payments, et cetera. It just shows that there are some cracks in consumer spending. That doesn't mean it's the end of the world. But again, it goes back to this feeling that with valuations where they are and interest rates coming down, with interest rates elevated, 15-year highs, it's going to be tough for the stock market to push a lot higher as we move into this tough time frame, which the September and October tends to provide.
Well, I mean, Matt, you are right. The yields are coming down just a bit. So, of course, we're looking ahead to PCE today. Is this the big inflection point that it's been in previous months? Do you believe that this will be either the nail in the coffin to pause or to hike? Is this it?
I think it will be. But again, one thing we do have to remember, I think the most important thing investors have to remember, the Fed was always going to have to tighten whether inflation was a problem or not. I mean, they pushed interest rates to incredibly artificially low levels in 2020 because we had a pandemic and the entire global economy had shut down. So therefore, they were always going to have to raise interest rates to a certain level, not as high as they've had to do it. But my point is they're not going to come down as much as people had thought, and that's going to create some headwinds.
So wait, Matt, just to be clear, though, so you think this is the final decision to either pause or hike? Which one do you think this will be?
I think that they're going to pause and they're done. They're going to done raising rates. I just don't think it's going to be quite as bullish for the stock market as a lot of people think it will be.
So it doesn't matter if PCE is higher than expected?
If PCE is higher than expected, then they will hike even further, and that's going to have a big problem for the stock market. So I don't want to say it's a lose-lose situation, because I'm not calling for the end of the world here. Right. I just think the stock market's had a great run here so far this year. You're getting 5% for cash. Why not raise a little bit in case we do see a pullback? And if I'm wrong, you'll get paid to wait. Okay. And again, it's not like I'm saying you should go to 50% cash or anything like that.